Hey guys, welcome to the fourth part of the series of learning to trade crypto charts for beginners. If you missed the previous three, you should go watch them. In the first one, we give a general introduction, and in the second one, we talk about the moving averages, and in the third one, we talk about the MACD. Today, in this fourth one, we're going to talk about the RSI, or the Relative Strength Index. So, let's get started. Wait, before we start, don't forget to like, comment, subscribe, and share this video with your friends. The RSI is an indicator that measures the momentum and rate at speed at which an asset is moving, such as Bitcoin. The RSI is used in the crypto, forex, stock, and other markets. If you're trading crypto on Phemex, the RSI indicator is available to everybody for free. You just go to your chart tools and find the RSI and turn it on. It's as simple as that. But if you don't know what it is, you don't know how to use it, and so hopefully this video will help you in that regard. RSI is one of the best indicators for crypto trading and a favorite among veteran traders. The readout from the RSI can give a good indication about whether an asset is being overbought or oversold. This indicator is based on the average upward price change divided by the average lower price change over a period of time. Let's look at the RSI calculation. The RS stands for relative strength, and it's calculated by the average of N closes upward divided by the average of N closes downward. This value is then indexed to 100 using this formula. This leaves us with a value that's between 0 and 100, and for that reason, the RSI is known as an oscillator. The standard period setting for this calculation is a 14 period. If you watch the moving averages or MACD videos, you'll know that periods can be any length of time. So for example, if we're looking at a daily chart, then the 14 period is 14 days. Whereas if we're looking at an hourly chart, it's 14 hours, a minute chart, it's 14 minutes, so on. So the RSI is mainly telling you whether the asset is overbought or oversold. But we need to know which values signal which situation. An RSI value over 70% indicates that the asset is overbought, whereas an RSI value below 30% indicates that the asset is oversold. If an asset is overbought, or over 70 in the RSI value, this means that it's appreciating and might indicate that it's going to break down to the downside. Whereas if an asset is oversold, or less than the 30 value, it means that this asset is depreciating and could reverse back to the upside. Applying these criteria to the RSI in isolation usually doesn't work that great, but it can be used along with other indicators or in different strategies to get even better signals and give you an edge while trading. For example, using RSI along with volume can tell you if the volume has peaked at multiple points to justify the upward trend, or if it's only peaked once and it's more likely to break back down. Let's look further into how to understand the RSI indicator. One important thing to remember is that RSI can remain overbought or oversold for a prolonged period of time. In bull markets, we can see cryptos remaining overbought for a long time, and in bear markets, the opposite is true. It might be oversold for a long time. But the RSI is a momentum oscillator, and it can be useful at pointing out and making it a little more obvious when the price has continued in one direction for an extended time. However, these conditions of bull and bear markets are when overbought and oversold would be the norm. For this reason, the RSI can act as more of a signal or indicator to look more closely at what's happening in the market, to the trend of the asset, and looking for other signs that it could be getting overextended in either direction. Overbought or oversold states aren't something that should be acted on alone immediately in most cases. Another key point of the RSI is that RS dictates price action. And it's important to understand how the calculation and the reading of the indicator you're looking at relates to the price action. If the price of an asset you've been looking at has been moving in a relatively tight range for a prolonged period of time, then the RSI is most likely going to look quite neutral. Therefore, any impulsive move to one direction is going to act like an outlier and throw the indicator to one extreme or the other. But this could be the breakout that leads to continuation. You wouldn't want to look at this as overbought or oversold territory that's worth trading. Similar to moving averages, the RSI is best applied to its most suitable trading environment. For moving averages, these are trends, but the RSI is often best used in ranges where a drop-off in momentum at the extremes is one of the telltale signs of expected reversals. Applying the RSI in a strong trending environment is one of the best ways to end up acting on false signals. It's quite common to spot divergences in the RSI in a trending market. So it's important to understand that a trending market's going to be filled with plenty of RSI divergences, giving the very normal periods of consolidation that follow after impulsive trends. Let's look closer at the RSI numbers. A good RSI number for shorting crypto is 70 to 80, while a good RSI number for longing crypto is 20 to 30. A trader could make profitable trades based on the RSI indicator alone using these measurements. To make money in crypto, traders are taught to buy low and sell high, and RSI can help you achieve that. The RSI indicator was specifically designed to help you better time bottoms and tops. You can use the RSI in bearish trends and bullish trends. A good RSI to buy is when it's below 40, and a good RSI to sell is when it's above 70. In the case of a bearish trend, a bullish divergence is when a price makes a lower low, but the RSI makes a higher low. However, using the RSI for divergences is problematic if you act prematurely. So what are bad RSI numbers to use? Essentially, you want to avoid selling below 40 or buying above 70. In either case, you could be panic selling or FOMOing in the peak of a bull run. Similar to any other indicator, a system can be built around the RSI. It is, after all, one of the most common trading indicators available. Of course, another important question, is it reliable? RSI is among the most reliable indicators for both short-term and long-term trends. However, RSI tends to be more accurate when it confirms to or matches other long-term trend patterns. A wise trader should use the RSI indicator on daily, weekly charts to analyze previous price movements and derive conclusions on the current state of the market. So again, low RSI means that Bitcoin or another crypto is being oversold. This is an excellent buying opportunity for traders and accumulators. When Bitcoin bottoms out, it rarely trends below the bottom unless it's in a deep bear market. Bitcoin has traditionally bottomed out in the 30 to 40 RSI range. The values in the low 40s and 30s are an ideal place to buy Bitcoin no matter the price. This often indicates that Bitcoin is expecting a trend reversal and might get some upward momentum in the short term. If a trader wants to improve their accuracy of their RSI indicator, they can elevate their overbought settings to 80 and their oversold settings to 20. This will weed out most of the market noise and help them make calculated moves. Of course, likely you're not going to want to look at the chart all day, but you might want to buy when the RSI gives you a signal. For this, you can turn on alerts. If you want to set up alerts for when the Bitcoin RSI makes a move, the most widely used site is TradingView. TradingView allows you to add custom alerts for all trade indicators. These alerts can be emailed or texted to a trader. You can use Phemex BTC USDT trading pairs on TradingView to strategize your trades on the site before you open an actual trade on Phemex. So in conclusion, the Relative Strength Index, or RSI indicator, like all price action derived indicators, shows you what's right in front of you. All you are seeing is a smoothed out representation of the ongoing price action. Indicators make the finer details a bit more digestible and obvious. What's most important is that you understand how the indicator is calculated. This way, you're familiar not only with its strengths, but also its weaknesses. The RSI is an excellent tool, but like all other indicators, it can give a ton of false feedback. Prior to using the RSI indicator to make real trades, be sure to heavily backtest and always record the data around your trading performance. So I'll stop there for this video on RSI. That'll bring us to the end of our fourth installment of the series on beginner chart analysis for beginner crypto traders. I hope you found this helpful, and thanks for watching. I'll see you guys on the next one.